US jobs just soared past every prediction. Does this kill the recession talk for 2025? Let's dive into it. Welcome to DK Global Market Insights. US jobs just soared past every prediction. Does this kill the recession talk for the year 2025? Today, we are unpacking a massive payroll surprise, unemployment trends, and the yield curve mixed signals. Let's dig into what's driving the stock markets right now. First, big news. US non-farm payrolls exploded by 228,000 in March 2025. That's really a jaw-dropping 66% above 140,000 economics expectation, way above the February's revised estimate of 117,000. Healthcare led with 54,000 new jobs, followed by social assistance and transportation. Wages also ticked up by 0.3% monthly, hitting 3.8% yearly, the lowest since July 2024. This isn't just a blip, it is the strongest growth since December. So are we waving goodbye to recession? Let us check the yield curve. It is a recession predictor. When short-term yield curves like 2 years top long-term ones like 10 years, it is inverted. And that's called every US recession since 1960. 10-year, 2-year spread inverted in July 2022. State that for a long period of 2 years, then uninverted in September 2024. Today in April 2025, it is positive, say 10-year at 4.3% and 2-year at around 4%. Historically, recession hit in around 12 to 18 months post-inversion. We are at 33 months with no crash. Did this job boom just break the curse? Now let us talk about the economy's heartbeat, unemployment. March rate ticked up slightly to 4.2% from 4.1%. Despite the payroll surge, this has happened. That's still the tame compared to 2020 when it hit 3.5% pre-COVID and then rocketed to 14.8%. Today's 4.2% is up from 2023 low of 3.7%, but no panic yet. Typically, unemployment bottoms around 8 to 12 months before downturn. This slow climb isn't a screaming crisis, but if it jumps past 4.5%, watch out. For now, this jobs blowout suggests a strength rather than any kind of strain. So what's the story? The yield curves uninverted, payrolls are soaring, 228,000 jobs don't lie, and unemployment's steady. Historically, inversions signal trouble 12 to 18 months out, like 16 months before 2008. But this time, we are past that window. Is this a new era fueled by a resilient labor market or head fake before a fall? The markets might have the answer for it. Next 5 minutes of global index charts. Do markets buy this jobs boom or brace for fall? We are hitting S&P 500, FTSE 100, Seng, DAX, Nikkei 225 and Nifty 50. Let us find out. Stay tuned for the charts. But before we move to the price chart, let me share with you the latest fear and greed index data. It currently reads at 4, which means it is an extreme fear zone. The possibility of market bounce cannot be ruled out as the market is quite overextended, quite oversold. This is the price chart of S&P 500 index in weekly time frame. There has been a vertical drop in S&P 500 after it attained the all-time high of 6,147 in February 2025. If we measure the extent of fall, it is around 17.5%. So pretty big fall in S&P 500 index. But if you look at the price action, price has taken support here. It has taken support here. It has taken support here. So this rising trend line is acting as a established dynamic support. There is a breakdown of this particular trend line on a closing basis, but this is not a decisive breakdown. However, if you consider this rounding pattern, this is the neckline area. So 4,800 to 4,950 seems to be a good support, and I expect that the S&P 500 should somehow halt its correction in this particular demand area, which also coincides with SMA 144. Look at here. When this correction took place, it halted little below SMA 144. This could be the potential good support area. At the same time, if you look at the momentum indicator, RSI, and measure this level versus this level, there is a clear momentum discrepancy on RSI, which further suggests that the fall may be arrested soon after it tests the neckline area of this rounding bottom pattern, because after the breakout, there was a parabolic rise and there was no correction. It has never tested the neckline area of rounding bottom pattern. This is the price chart of FTSE 100, that is UK market in weekly time frame. What we see, this was a very major area of resistance. It gave a breakout over here, and if you see the price structure, higher highs and higher lows kind of market structure. In the recent time, it has given a breakout of a continuation chart pattern cup and handle. It attained the target for cup and handle, and this correction has started. Now the price is trading quite in proximity of the support zone. This is the trend line which is acting as a dynamic support, and this area is the neckline area of cup and handle pattern. So this is also trading quite in proximity of trend line and the neckline area of cup and handle pattern. We might expect that the correction should halt at something around 8,000 level. Currently, it is trading at around 8,055. This is the price chart of DAX, German stock market. Here too, we can see the formation of a continuation chart pattern. This is the neckline area. It gave a breakout and correction is now taking place. This index has corrected only 12.8%. So comparatively, this has outperformed S&P 500 index. Look at this trend line. Price has taken support here, taken support here, taken support here, and this trend line coincides with EMA 55. So we might expect that the correction may halt at EMA 55, which is currently reading at around 19,700. This is the price chart of Nikkei 225 index, Japanese stock market. What we can see over here, that the recent time correction has been almost vertical. But this is the area of a strong resistance, and it gave a breakout over here, which means this particular zone is a strong demand area which coincides at SMA 144 as well. So currently it is trading quite in proximity of SMA 144. This is Seng index in weekly time frame. It was for a very long time on a downtrending move, but ultimately it formed the double bottom kind of reversal chart pattern. This was the apex. It gave a breakout over here. Now the price is trading quite in proximity of the neckline area. So this is a normal throwback in Seng index, and the target for this double bottom comes at 29,300. This is the price chart of GIFT Nifty 50 index from India. Look at this trend line. Price has taken support here. Price has taken support here, support here. So this becomes a very important trend line, which should act as a dynamic support. At the same time, there is a little above this trend line is SMA 233 and SMA 200. So this particular zone, 21,500 to 21,900, is a typically very strong demand area. And this was the area of very strong resistance. It gave a breakout, and this is nothing but the cup and handle kind of chart pattern with respect to the prior impulsive wave, and the price is trading quite in proximity of SMA 144 and also the neckline area of this cup and handle kind of chart pattern. Majority of the indices globally are trading quite in vicinity of the support area, but the concern area is valuation. S&P 500 is the most expensive index. Its current price to earning multiple stands at 25.2. However, the forward P comes at around 20. While UK market of FTSE 100 is at 17.5, Hang Seng Index 15.5, DAX 17.5, and Nikkei 225 at 13.8. While India's Nifty 50 stands at 20.8. So US market looks most expensive market currently. What is your opinion about the various stock markets that we have discussed today? Drop in your comments in the comment section. Looking forward to meet you in the next video.